All right, you cannot be blamed if you never want to delve into the stock market again after the year that we've had in 2000.
It's hard to laugh about,
but you know what? We can at least we're in it together. There's nobody who made out in 2008 well. But with history as our guide, markets do crash and markets come back. They work in cycles.
It is a cycle, and we've been here before. We've had big losses before. We've come back. So the question is, do the big losses this year mean big opportunities for you in 2009? Do you stay risk averse? Do you take on a little bit more risk? If you've got any money left, what in the world do you buy? Joining us now is Mack, president of Optimum Capital Management. If you've got money left.
Anybody can, there's something you can do, Ryan. We can all figure out what our risk tolerance is. If you work with an advisor, they will give it to you, but you can go on the web and you can answer a few questions and you can find out whether you are risky or not. You may feel it, but you may have to answer a few questions.
Well, the risk tolerance is the most important question. Nobody wants to lose sleep while you're trying to invest in the stock market, so you should only take on as much risk as you can actually bear.
Now, sorry to interrupt you. Why are you even recommending it that individuals who are watching our show buy stocks as opposed to mutual funds?
If you look at, individual stocks, I actually prefer mutual funds, as a matter of fact. Mutual funds are diverse. You get the most diversity, the biggest bang for your buck in terms of being able to purchase the most stocks for the least amount of initial capital. But there are those individuals out there who want to take a little risk and put some on the table and purchase individual stocks. And for those individuals, I have some things prepared.
All right, well, let's talk about, I'm pretty risk averse. In fact, I'm very risk averse. Unlike Allie, who's not.
Right, that's why it's a good combination.
Let's start with me, and let's talk about risk averse stocks. Okay. What do I look at for risk averse?
Well, first of all, I think 2009, the first half was going to be still recession, but the second half, I'm predicting a recovery.
You do in the second half?
I do think we'll recover somewhat in the second half, not very strong. But I do think if you look at the consumer staples section, industry rather, these are the stocks that are dealing with more needs as opposed to wants. And the one stock that I pick out in that industry is CVS. I think CVS is a company that handles its debt very well. I think it did not do as well as its competitors in the pharmaceutical, but in the retail sales, it outperformed the industry. So for a good long-term play at the price level it's trading at now, CVS is very good.
And you like Johnson &
And then
Johnson.
Johnson in the healthcare sector. I think the healthcare sector does not traditionally follow the overall economy. So I think Johnson & Johnson, they deal with generic as well as pharmaceuticals. They've got somewhat of a little bit of competition from generics, but they had very solid results in the last quarter within their medical devices segment.
We talked about Christine. Let's talk about me for a second. I'm more of a risk taker. In fact, by being a risk taker, my 401k in 2008 really got hammered because it was much more heavily into stocks.
I'm risk averse, and my 401k got hammered in 2008.
So who got hammered worse? But let me tell you, you've got stocks that you're thinking about for a risk taker. One of them is Microsoft, and one of them is JP Morgan Chase, a bank in a year that we've had nothing but bad news from banks.
Well, I'm actually looking at Microsoft and JP Morgan. I think that Microsoft in the technology sector, you can't dispute their financial record. I mean, Bill Gates did a tremendous job in putting this company together, and at the end of the day, if you look at what their product line, very diverse product line, they came out with the Xbox a whole year in advance of the PlayStation. AT&T and Verizon both selected them for the IPTV platform. So you can't dispute their financial record. In the financial sector, the sector's been battered as well. So JP Morgan, I think, is going to be the one bank that's going to outlast all the other banks. I think, of course, they've got a lot of risks, $77 trillion exposure in the derivatives market, and a lot of rising loan costs. But at the end of the day, JP Morgan, their purchase of Washington Mutual gave them a huge national debt deposit base. Their purchase of Bear Stearns gave them a huge bottom line boost. And I think that they've always kept a very conservative balance sheet. So I really like JP Morgan Chase.
A lot about money.